these young kids want cryptocurrency. That's where it's exciting. They want to be. But I think as they mature and as they see crypto maybe pull back and kind of get a bigger correction, they're going to start saying, okay, well, where else can I go? And that's where the metals come into play here, especially gold. I think gold could be a great play for that factor.
This is Dunnigan Kaiser, founder of Liberty and Finance. I'm now a licensed gold and silver broker for Miles Franklin. Call me directly for the physical gold and silver that you need at the best price with personalized private service from one of the oldest and best companies in the business. 31 years strong, A+ rated by the Better Business Bureau, 0 complaints, licensed and bonded for physical delivery, vault storage, or precious metals IRAs. Excellent prices, privacy, and confidentiality. Pay by check, money order, ACH, bank wire, or Bitcoin. Satisfaction guaranteed. Call me directly at 419-819-9209 or my sons and fellow brokers at 310-562-6400 or 419-490-5295 or email us kaiser@milesfranklin.com.
Hey everyone, this is Elijah K. Johnson with Liberty and Finance. And with us today is Gareth Soloway from InTheMoneyStocks.com. Gareth, thank you so much for joining us today.
Thank you for having me, Elijah. I appreciate it so much.
Definitely. Now I wanted to unpack kind of what we saw in the metals last week, where gold broke above $1,800 and silver jumped about $2 above $27. What is your perspective on what's happening and what are some of the key price points you're looking for? And are you seeing that this rally will continue?
Yeah, so we've seen a beautiful move up in gold and silver over the last week or so. Even though yields aren't really pulling back much, they're actually starting to inch up. So that's a good sign for the metals when they're kind of ignoring the uptick in yields. One of the things I'd like to talk about is this really cool Fibonacci retrace on the gold chart that gives us a good idea of what's happening. And what I'll do is I'll share my screen here so you guys can take a look. And this is a fascinating chart because it goes back to the late 70s, early 80s, when you had the high pivot approximately $876 on gold. And then you could see here in 2008-ish or so, we broke above that high from 1979, 1980, and then we retraced back down. And that was prior to the next big breakout that took us all the way up to the 1910 level. And what's so fascinating about this is it was a classic Fibonacci 382 retrace in the market. Now, what I find fascinating is that if you look at the recent breakout where we busted through 2,000 on gold, what was that, 6 months to a year ago or a little less, you can see that the retrace now has basically taken us down to this 1749 level, and we've started to move up again. It's another Fibonacci 382 retrace. So one of the things I love about charts is that you can look and see these similarities historically, and it gives you insight into where something, or in this case, gold, could go. So the idea is if you look at this big move that we had from 2008 all the way up into the, 2012, 13 or so, that was an epic breakout. We should be setting up to do that same sort of measured move on the gold chart. And last thing I'll show you guys here on the charts is just basically a projection of where we could go. So I'll bring up this chart now, and we'll zoom in a little bit so we can see it clearly. And you can see if you just take the 875, 876 high to the next high of 1920, 1910, that was about $1,045 move on gold. The idea is you should get a measured move equal to the same amount, which gives you a general target of around just shy of $3,000 an ounce on gold. And I would say about 2 to 3 years maximum for that target to be hit. So just really cool stuff there in terms of where gold could go, what gold is probably doing. It's probably beginning its next up move here after doing that 382 retrace.
Looking on a fundamental level, do you think that is a good value for gold given all the money printing, the government has been doing and also the stimulus we've been seeing? What do you think is the fundamental value of gold right now?
Yeah, I mean, fundamentally, gold should be a lot higher right now. I think the fact that you have Bitcoin and cryptocurrencies taking some of the shine away from gold with money flow. I mean, it's just the bottom line is that institutions and retail investors, everyone can see what the Federal Reserve is doing. They're printing tons of money. The government's printing tons of money, and investors are saying, okay, we see this. How do we protect ourselves? So the obvious one is gold, silver, palladium, platinum, the metals, even oil to some extent, a little bit, although I don't like that as a long-term hedge. But then people are also saying, okay, cryptocurrency, right? So I think if you didn't have crypto in its current form, you would see a lot more upside currently on gold. But I still think gold will get there. Cryptocurrency is way too high right now. It's got to have a corrective move. I think you're going to see money flow from crypto back to gold a little bit over the next few months, which should boost gold nicely as well.
No, I'm also hearing that the whole thing about cryptocurrencies has also brought a lot of people to the alternative currency sector, if you want to call it that, right? Which includes gold, because cryptocurrencies are an alternative currency, and people are kind of waking up to the fact that, wait, we don't have to just use government currency. There are other options there. So I guess what is your perspective on that? The perspective that it actually has brought more eyes, more people to look at gold as well.
That's absolutely correct. So if you think about it, if you just take a 20-year-old, your average 20-year-old, before cryptocurrency, they didn't really have any sort of idea about hedging themselves against, inflation or printing of money. And now people are starting to look into, you hear about Dogecoin, which, by the way, is a horrendous way to protect yourself, but it's popular. And then Bitcoin and Ether and all these other forms of cryptocurrency, and all these kids, these young people that would have never thought about it, they're saying, okay, well, what's the purpose? Oh, the purpose is it's a different form of currency. Oh, why? Because the government's printing and all these things. And so it absolutely brings a whole new generation, many generations, into kind of the idea of protecting yourself from inflation and the printing of money. And inevitably that finds its way to gold. Now, I'm in the personal thought of, right now, these young kids want cryptocurrency. That's where it's exciting. They want to be. But I think as they mature and as they see crypto maybe pull back and kind of get a bigger correction, they're going to start saying, okay, well, where else can I go? And that's where the metals come into play here, especially gold. I think gold could be a great play for that factor.
That's really interesting. So we're kind of seeing a lot of people move into the cryptocurrency space, but if they pull back, then a lot of those people will move into gold, is what you're saying.
Yeah, absolutely. I think that's so key. And I think even you've seen this overabundance of movement into the cryptocurrency, which inevitably will kind of pull back a little bit. You'll still have people buying the dip, and you'll still have a long-term, creation of wealth there that I think Bitcoin is eventually going to go a lot higher. But you've had too much, and there has to be a little bit of a pullback, and that money will then look for a different area to go in to protect itself.
I think the old cliche is that, if you start hearing all your neighbors and all your friends talking about crypto or talking about an asset, then it's probably in a bubble. And that's totally my experience. Is all my friends are into crypto and talking about it. I'm like, oh, I should get into that. And it's like, that's not a good sign right now.
Yeah, and I mean, and just to speak to that point as well, is that, I mean, I literally was getting a delivery from the UPS guy, and him and I have chatted about trading before, and he's like, oh, I'm in Dogecoin, And I mean, literally just average Americans, they're all excited about crypto, and that's usually, and I've been through I've traded since the late 90s, so I've been through the dot-com collapse, I've been through the 2007 financial collapse, and those are the signals that make me on high alert for kind of a flush out, in this case in the cryptocurrency area, which again would then lead you to believe that gold would be the recipient of some of that money flow.
Now, moving to silver, we saw last week silver break above $27. What are the key resistance points we still need to break through, and what is your outlook for silver right now?
Yeah, so that's a great question. And what I'll do is I'll show my chart. We'll go over the SLV here for this, which is the silver ETF. That's the one I kind of follow and I trade a fair amount. And you can see that we're in this nice bullish consolidation on silver. And you can see the pivot top going back to July of 2020. We then had a lot of consolidation. And then this pop right here, which was a nasty reversal candle, that's kind of where the Reddit crowd got excited about silver. And we heard people saying, oh, they're going to squeeze silver to $100. And right away, by the way, I came out and I said, listen, the silver market is massive. I mean, there's a big difference between squeezing GameStop and then squeezing silver. So we did see a reversal there and pullback and more consolidation. But what that does is it basically creates a very defined pivot high where we can watch for a breakout. So silver continues to trade in a bullish pattern. Eventually, the expectation would be is that it's going to take out the Reddit high here and this high pivot over here. And once it does that, you can arguably say you could be in line for a measured move sharply higher on silver. So just to go over a measured move here, you basically would take this low going back to March of 2020 and this high here, and that's about $11 to $27, so that's a $16 range. And the idea would be is when you break out, you would add another $16 to get an even measured move. And measured moves are something I use in trading quite a bit, whether it's stocks or commodities or currencies. There's something psychological about a measured move that happens to replay over and over again. And I think that would be a good opportunity for investors to look at. So look for the breakout. When it goes, it should go big.
Now, you're mentioning within about 2 years, we could see around $3,000 for gold. Do you have a price target for silver?
Oh, that's a good question. I mean, I would think potentially $50 in that same period. But silver, I've had a harder time predicting because of the industrial side of things. And it's one of the reasons why I'm a little bit more kind of cautious on trading it myself as a longer term investment. I'm much more into gold and other things just because of that industrial side. I worry that the U.S. economy, which is having this robust reopening right now, what happens after, right? So you get this massive reopening, everyone's traveling and spending, and then you come off that high. And I don't think we'll go negative on GDP, but you could come from a 10-point GDP number down to 4. And then, do we see demand for silver in the industrial side kind of fall off a little bit? And that's why it's just a little trickier. But I would say, again, 2 years out, I could see $50 easily, maybe more.
And do you see downside for silver? Like you're saying, if the economy pulls back, that industrial demand could pull back as well. Do you see downside from here?
I think that for the most part, because the printing of money is going on, and I'll show my chart again just to go over this, but because the printing of money is going on, I think that the downside is somewhat limited because you'll have that offsetting the aspect of lower industrial demand. But the one thing I would watch on the chart is see this lower trend line basically connecting this low, this here, and this here. As long as silver doesn't breach that line on a daily closing basis, then silver is safe to be bullish on for now. If it broke below that, I would be worried that it would go down here, and then you could see all these kind of pivot highs right in this range that it would get to, and kind of this would be your next support level. So again, as long as it kind of holds this range, it's good to go. Just again, monitor that lower level. As a trader, you always have to look at the positives, but also the negatives. We just don't want to say, oh, we're going to make millions of dollars on this trade. Well, what if it doesn't go according to plan? Because many trades, even for myself, they don't go according to plan.
With respect to what the Fed is doing, though, you mentioned how there's a lot of money printing going on, and right now it seems like they're still pretty dovish. They're printing billions, over $100 billion per month. So do you see this continuing? And if we have sort of an economic pullback, do you see them acting even more dovishly? What do we expect from the Fed maybe in the next year?
Yeah, so the Fed is in a tricky spot, right? They've tried to thread the needle. The market has a way of forcing their hand to stay dovish. We saw this in 2018 when you had the temper tantrum when they started to taper and push rates up a little bit. The key here is that the Fed is going to try to introduce the idea of rate hikes very slowly. They tried, I think it was last week with Janet Yellen. She started to talk. Now, she's not part of the Fed anymore, but they all work together. Let's be honest. They're all talking. They're all keeping in touch. And the Fed will try to have these kind of outlier participants mention rate hikes to get the market more used to it. Because the worst thing for the overall market would be if all of a sudden Jerome Powell just comes out and says, we're raising rates, then the market freaks out. But if they get the market used to it, like warming the water 1 degree at a time by having a few Fed presidents mention interest rate hikes, Janet Yellen, then the market starts to become accustomed to it. Now, the tricky thing is going to be is that based on the amount of debt that the U.S. has, rates can't go up that significantly, or we're going to be in a big issue here in terms of paying our debt, the interest on our debt. So I think interest rates will go up. The Fed will have to push them up. They need to get bullets back in that gun that they can use in the future. But at the same time, there's definitely a cap on it. The one thing I'd love to show you guys here is this is a really cool chart. Let me see if I can pull it up here and show you guys. But basically, there's a max level on the 10-year yield that I'm keeping an eye on. And basically what we have is an inverse head and shoulder pattern. And inverse head and shoulders are bullish patterns. And this one happens to be on the 10-year yield. So this implies that if the 10-year yield breaks above, and I'll zoom it in just because I want you guys to be able to see as well as I do here. If you break above about 1.72% on the 10-year, you actually could get a move up to a target of about 3.25%. Now, if you get to 3.25%, the whole U.S. is going to be in a crap load of trouble. Now, the tricky thing is you say, well, what's 3.25% in comparison to the history, right? And we've had rates way higher, but we haven't had our national debt this high. And, when you get to these levels, the Fed will be forced to do whatever they take, whether it's locking in interest rates at a lower level, not allowing them to move, or the U.S. will potentially default on their debt payments. And it's a scary scenario here because, the Fed is kind of saying, okay, well, we need to get rates up a little bit so we can lower them again because inevitably the U.S. economy is going to have trouble in the future. But at the same time, if they push them too high, then you have this potential debt collapse issue. So it's a tricky thing right here, but I do think the rates will go higher. I don't think there's any way they can't because foreign countries don't want to lend us money if they're going to get negligible interest rates. The more debt we take on, the more they'll have to demand higher interest rates. So it'll come to a head eventually. It might not be pretty, though.
Now, with respect to the rates, you showed the chart and using technical analysis on that. Can you use technical analysis when, for example, rates, those are very much controlled by the Fed, right? It's not 100%, right? There is a little bit of a market there, but the Fed does control them. So what is your perspective on that? Like, how can you use technical analysis on a controlled market?
And that's a fantastic question. So the idea here is that charts are charts, and you should be able to use technical analysis on them. It's not to say that if the Fed came out and said, we're gonna lock in interest rates at 2% no matter what. But from my experience, the market ultimately controls it. So the Fed can influence it by selling bonds and pushing rates around and setting their Federal Reserve rate, which is the lending rate for banks. But inevitably, if the U.S. needs to raise, $1 trillion and they go to China and Japan and other countries, and these countries say, hey, listen, unless you pay us 3% or 3.5%, we're not giving you any money. That would be the scenario. So yes, I would say that the Fed can control it to some extent, but inevitably the market, for demand for our debt will control it.
And with respect to the economy, as we're talking about how you're seeing possibly an economic slowdown, maybe the economy getting too ahead of itself right away, kind of how does the recent jobs numbers we're seeing, how does that play into all of this?
Yeah, so the jobs number came in on Friday, this past Friday, at 266,000 jobs created, which was far less than the 1 million expected. Initially, interest rates fell sharply. And then by the end of the day on Friday, they were right back to break even where they started the day. And what that told us is that the market didn't believe the number necessarily. And I don't think that the number was false, right? It was more that you have a certain amount of stimulus that, unemployment benefits and certain things like that. And there's no doubt that if you're making about the equivalent of the unemployment benefits working at a restaurant or something, and you cannot work and get the same amount, you're going to probably opt to not go back to work until that is cut off. So I think the market's telling us that, once those benefits run out in September, you should see a big influx of jobs, and those numbers should jump sharply. So I think that's what it's telling us with the light jobs number.
All right. Well, Gareth Soloway, we really appreciate your time today and all the insights you've shared with us. If our viewers would like to hear more of these interviews, they can go to libertyandfinance.com. In the left-hand corner there, put your name and email, and you'll be notified of all the new interviews we're doing. It's a free newsletter. Please sign up for that. And before we let you go, did you want to share with the viewers where people can find you and any last thoughts you'd like to add?
Oh, absolutely. So thank you so much for having me. It's always fun to get on and talk markets and help people understand what the inner workings are going on. And I love talking charts and technical analysis. To find me, come to Twitter at Gareth Soloway. That's a great place to find me, where I post free information and little tidbits on the market and chart setups. And then you can also come to my website, inthemoneystocks.com, and you can find a service that I run called Verified Investing Alerts, where I do stock trades and commodity trades and all that fun stuff as well. So again, thank you so much for having me.
Thank you so much, and God bless.
Thank you.
This is Dunnigan Kaiser, founder of Liberty and Finance. I'm now a licensed gold and silver broker for Miles Franklin. Call me directly for the physical gold and silver that you need at the best price with personalized private service from one of the oldest and best companies in the business. 31 years strong, A+ rated by the Better Business Bureau, 0 complaints, licensed and bonded for physical delivery, vault storage, or precious metals IRAs. Excellent prices, privacy, and confidentiality. Pay by check, money order, ACH, bank wire, or Bitcoin. Satisfaction guaranteed. Call me directly at 419-819-9209 or my sons and fellow brokers at 310-562-6400 or 419-490-5295 or email us kaiser@milesfranklin.com.